Start recording. All right, welcome everyone to a Magnificent Obsession podcast, and our guest here today is, some people might call him a legend in the trading world, and this podcast is really about people who, highlighting people who basically have an obsession with something that they're really passionate about, and they really want to do it every single day, and it takes over their life, and it's really transformed their whole life in general. And at the same time they've overcame certain things in their life, because the whole premise of this podcast is the when you see people that are doing something amazing, and I think the key to success, and the I've observed over time, whether it's a great athlete or a really successful business person, is they have this obsession with their passion, their desire, this vision. And from the outside it looks magnificent, right? Just like for me, when I do my magic or illusions, people think it's like, wow, like that's amazing, but for me, I know that it took a level of obsession and focus to do that. So the guy that I'm bringing on today, he invented what's called the Camarilla pivot or system, which he'll correct me if I'm wrong. And he's originally from Montreal. He'll basically, anything that I say here right now, he'll correct me. But yeah, I just want to introduce you to him, Mitch Kurzencywg. Is that how you say your last name?
Yeah, it's Mitchell Kurzencywg. Thanks for inviting me, Jordan. It's a pleasure to be on this podcast. And it is actually the Camarilla Equation.
Camarilla
But
Equation.
over
Okay, thanks for
time,
correcting me.
over time, it got basically an AKA Camarilla pivots. People started calling it the Camarilla pivots, but originally it's
Oh, all
Camarilla
right.
Equation.
Okay, amazing. Yeah, so I guess, yeah, give me a little bit a background about yourself, and like, how you started, where you grew up, and kind of
Okay.
like your background and how you yeah, just what you currently do basically.
Okay. Well, basically, this all started actually. I was attending McGill University. This is back in 1987, and and when the crash of '87 happened, which is in October, I believe it's October 19th. I suddenly got interested in the stock market. However, my father did play the stock market for many years. And so intrigued. And also the Wall Street movie, of course, with Michael Douglas, Charlie Sheen,
Yeah.
came out. So such a buzz, and the market crashed. It was a huge crash, percentage wise. And then I started reading books. I was like reading all the books in the library, in the financial section of the library at McGill University. And just reading every single book. I got so interested. So I fell upon this book that offered an equation to measure risk volatility on a stock, which it's actually called beta. And I'll give you the formula. It's high minus low divided by high plus low divided by 2 times 100. So if you take the 52-week high and low and you put it into that formula, it's going to give you a percentage. And based on a stock's price, if the percentage, let's say, is above 60 or 70%. So, for example, recently I just looked at the beta on Tesla. Tesla has virtually 100% beta, which means that the volatility versus the price of the actual stock is enormous. It's a very
Yeah.
volatile stock,
Hmm.
which is good for day trading. So basically, to make a long story short, I started researching that particular equation, beta, and based on that equation, I started to, play with the numbers. And from the time that I actually discovered the equation, which was in August of 1990, from the time that I started researching, so we're talking about 2.5 years for me to
Hmm.
get to that equation, to finally
Oh,
get it.
wow.
And then one more thing, Jordan. So I discovered the equation in 1990, but I wrote my day trader handbook, which I have the original right here. I have
Oh,
one
yeah,
copy.
yeah.
I printed 100 of them at the time. I sold it. I was selling it in Futures magazine, Stocks and Commodities magazine, but I keep one in a safety deposit box here in Montreal at the bank. And so this is the actual original. It's a little disheveled. I don't know if you can
Oh
see
yeah.
it well,
Oh
but
yeah, I could see it. Yeah.
that's the Day Trader Handbook.
Oh wow.
And I also found, going through my through some boxes that I had, is, believe it or not, the actual first check that I received from the first person that bought the Day Trader Handbook. I don't want to mention his name, but he lived he was in Chicago, Illinois, and the first time I started selling the book was $174.45, and
Oh wow.
I was advertising in Futures magazine, and this is the actual check, the original check that I
How much was
received.
that? How much you get? You got $174. That was
Yeah,
like the
and
first one?
this is back in 1990. This is with a classified ad that I put in
Oh yeah.
Futures magazine, about maybe 3 lines, and I only printed 100 units, and it took, I would say, about 3 to 4 months to sell out.
Oh wow.
Yeah, and then I didn't print anymore. I just wanted to sell 100 units.
That's awesome, man. That's awesome. So let me ask you a question. I mean, prior to you going to McGill, like, were you always into numbers? Like, were you a numbers guy, or like what kind, like, what were you interested in as you were growing up, like as a child, and going through school and everything?
Well, I would say my dad, he's passed on, but my father always played the stock market. And
Hmm.
look, was I a mathematician? Um, I would say more of an obsessive person that uh, you know uh, starts researching something and will find the means to try and get to the bottom line.
Hmm.
But I never had a problem with math. Um, I was a good student. I mean, I was generally, relatively speaking, a good student. McGill University is a very good university,
Yeah.
and not an easy university to get into. Some say it's the Harvard of Canada. And so, look, I was tenacious. I mean, we're talking 2.5 years from the point that I started researching this particular beta equation until I finally got to the Camarilla equation.
Hmm.
So to answer your question, not to get too personal, but it wasn't easy. You know, I grew up in a family where my parents divorced when I was young, and at school, nobody paid for my school. I had to do side work, all different kinds of jobs just to pay for my school myself. So it
Hmm.
was tough times, but the nature of who I am, the way I am, is if I set a goal, I'm going to find the way and the means to do it, and to overcome what I have to do to get to a certain point that I'm looking for, to reach.
Well, I guess, what were some of those, like, like, how old were you when you had to do those jobs, like, those side jobs kind of thing?
Well, when I was at university, I got into McGill at 21.
Oh, okay.
I was bussing tables, Jordan.
Oh yeah, nice, nice, man.
Look, I was
You got
delivering
it.
newspapers, waking up 5 o'clock in the morning. When I was 12 years old. Uh, and it was so difficult. I mean, if you really want to get to the nitty gritty, I paid for half my bar mitzvah. So I'm a
Wow,
Jewish
wow,
boy,
yeah.
and my mother, prepared, and got things together for that event, and she didn't have the money, and things were not good with my mom and dad. Things just were not good. It's not my fault, but
Mm,
that's what it was. But I worked hard, and I saved my money, and I gave her the money. This is what happened. So, but the thing is, the way I see it is, you just keep trucking. I mean, everybody. I don't think anybody in this world, uh, you know, goes in life without having, some pitfalls that they have to overcome.
mm.
But look,
Well,
at the end of the day, I ended up going to McGill, and doing what I got to do. and I'm a happy camper, and so yeah, so
Let
that's
me
the
ask you a
story.
question. Is that like was like being in, because sometimes yeah, it could be a benefit to be in those kind of situations, right? Like where, you're struggling and you had to kind of fend for yourself certain ways and you see your mom struggling. Like was that what really drove you back
Well,
then
look,
and even
that's
until now?
you're 100% right, because when I focus when we really look at the situation of when I started researching um, the beta equation. Okay. Um, After a year or so, I thought I was onto something, and at some points I was ready to give up, but I don't know. I just felt that there was something going on with my mathematical, calibrations, and how I was, and how I was devising this equation, but I couldn't get there. And then it took such a while, and then suddenly, with certain calculations, and calculating, changing certain digits, and so on and so forth, that I came up with the Camarilla equation, which basically is it is an equation based on previous day high-low settlement. So the high of the day, the low of the day, and the settlement plugged into a specific kind of equation, which spits out five resistance and support levels below previous day settlement. So this is what I found. So basically, in a nutshell, before even the market opens, before opening bell, there's a structured grid which is already set up prior to open, which basically points to pressure points where the market retreats, or reverses. Um, and just to toot my own horn for today, looking at the screen today, today was a huge day for my system in the E-mini S&P 500. We're talking the December 2023 contract, and today I picked up 5%. The market opened down, and within 2 minutes, the system was in on a long position. In fact, it was a position where we doubled down, and usually we play one lot here because of the situation. It was doubled down, and we sold out with a 5% return just in one day.
No, that's huge, man. I mean, like, I guess what I'm wondering too is like, there's a lot of these people that teach systems about trading and you know you see a lot of videos out there. There's people selling courses, selling coaching programs and groups and all that. Like how does this, like, your system differ from like everything else that's out there right now?
It's a great question. So look, everything based on my system, there's no subjectivity. It's all mathematical. It is quote unquote a machine, basically. It's all technical mathematical stuff. So, if there's a government report, unemployment report, I mean, that has no actual bearing on what the system uh, will do. The system doesn't change based on a report. The system is locked in prior to opening bell, right? So once the market starts trading, um, the system doesn't chase the market. It waits for the market to come to its entry point, and then we're in.
Mhm.
So like today, the market opened way down. Our entry point to go long was just below where the market opened. I can't say how far below, but
Yeah.
wasn't too far away. And it came down, Jordan, and boom, we got filled. And if you could see this chart, you wouldn't believe it. It just market started skyrocketing, and then the predetermined point to take our profit was hit, and we took a nice profit, and we doubled down. Um, so what makes it different? Well, there's a lot of automated systems out there, but
Hmm.
I can tell you one thing: how I measure personally, you know, how I measure an automated system is looking at the extremes. And looking at the extremes is the key. When I say extremes, what it really means is what's the maximum drawdown that a system can have over time, and what's the maximum markup? Like how much, well, markup, a maximum return, or the maximum point of money that could be made versus the kind of money that could be lost, because there's no system out there I don't think in the universe that will not have a losing day. I mean,
Yeah.
I've never heard of that. I mean, we hear horror stories of hedge funds losing billions. I mean, I don't know how they do that. I mean, if they have a good stop loss system, a good management system, how could you lose billions of dollars? So my system is structured. My automated system, which by the way is called Fortress Rubicon, and my website, of course, is fortressrubicon.com. And so, so basically, I look at extremes. So I really crunched the numbers last night, before our meeting today, and so I released a system in 2018. So the data that we have on my website is based on since the release of the system since 2018. So we have the data for all the years since 2018. And believe it or not, if you took the maximum high or the maximum amount of money you could have made on my system at the highest level every year since 2018. So I'll read it off to you and you won't believe. So in 2018, in 2018, you could have made 33% max on your money. Okay. 2019, 26% max on your money. 2020, 240% on your money. And we'll discuss 2020. 2020 is an exceptional year. 240% on your money, which is insane. 2021, the maximum was 100% on your money. 2022 was 100% on your money. That's max, which means that it went to 100% and then it settled. Well, in 2022, I don't have the numbers in front of me, but it did not settle 100%. I think it came down a little at the end of the year and settled. So the average since 2018, so we're talking 18, 19, 20, 21, 22, the average maximum return on average is 100% on your money in 5 years. Wait, but yet that's the extreme, right? But then you got to flip it over. You got to ask yourself, okay, fine. So you can make 100% of your money, but how much can you lose, right?
Yeah.
So then I look at the data for the last 5 years, and this is the data. If you take the maximum drawdown, which means the system, let's say you have $100,000, you started trading on January 1st, and the system failed, and let's say by April it fell 30%. Let's say 30% was the maximum that it came down, and then it reversed, went back up, or whatever it did. Currently, in this year, we're talking 2023, Jordan, my system, based on today's trading, is down 6%. We're not in the hundreds or 200s this year. It's been bouncing around. It had a drawdown this year. I believe the bottom was in April of 33%. That's the max drawdown for 2023 as of this date. But it's recuperated all the max drawdown and actually went to par, and then now it's bouncing around, and it's now down only 6% on the year. But looking at from 2018, excuse me, until the last year, 2022, the maximum drawdown is 38.8% on average. So what that means is that if you're generating on average in the last 5 years, I mean, of course, we all know, and you know this, past performance is no indication of future results. And we have that in the disclaimer on our website. We, in fact, have the CFTC recommendation on hypotheticals to be read. So, anyone investing in futures or stocks, it's a risky business, and there's a
Hmm.
risk involved, and there's no guarantees. However, just to go back to what I was saying, so if the average is 100% on your money in the last 5 years, the situation on the other extreme side is a drawdown of, on average, of 38.8%. Let's call it 40%. So what this means is if you can cover 40%, so if you're going to put margin, okay, let's say with the system that I have set up and the recommendation that I have on how much money you should be investing based on the number of lots for the system, based on 100,000, you should be trading going in on a 3 lot as a standard. So based on that, if you have the margin, so you don't want 40% of the margin, because at 40% of a margin, let's say it's 100,000. So you say, hey, you know what? Let me take a shot with 40,000 and take a shot. Well, you're taking a very, very high risk, because there could be a 40% drawdown. But if you're going in at 100% and you're able to absorb a 40% or even a 50% or even a 60% hit, odds are, based on past performance, you're absorbing a hit, but it's only a hit because based on past performance for my system, you're going to recoup your money. And based on the last 5 years, you just may make 100% on your money. So someone intelligent enough to put the right amount of margin in and think about the risk and the percentage based on the past performance of the system will invest enough money to absorb a hit, so that long term. And I'm a long-term trader. If I see 2 days of losses, I brush it off because I know what's going to
Right.
happen.
Oh yeah.
My system, Jordan, was down this year, down 33%. So what? Big deal. Now it's down 6%. But just got to be patient, because at the end of the day, if there's a good system regarding management of losses and a nice potential for taking profit. One thing I want to mention, since we're on the subject, is 2020, this trading year. 2020, we closed on the system over 35%. Like I said, the high was max was 240. So near the end of the year, we hit the max. And what is insane, and it's documented on the website, is that the S&P 500, since it started trading, I believe it was in 1982, has never experienced such an extreme year of volatility in the index ever since it started trading in Chicago in the S&P pits. So that year of 2020 was the most extreme, and of course, for good reason. Well, you know what happened. Of course, COVID kicked in,
Right.
and the markets went bananas. There was on most days, there were several days. You have limit down days where the markets just open way down, limit down, which you can't even trade. The exchanges lock it for a certain amount of time and then reopen it. So this was happening like every other day. I mean, I saw it myself. So this is what happened. And in a year of such conditions, the most extreme conditions in the history of the futures contract, we make close to 240%. That's 235% and change, whatever that is. It's on the website. With a drawdown, Mr. Aveas, the drawdown in 2020 was 32%. What that means is that for every dollar that you lost, okay, over the course of the year, you would have made yourself close to $9 for every
Wow.
dollar that you lost. That's insane. That's basically incredible, So, but then again, let's be fair. I don't think it was last year or it was the year before that at the beginning of the year there was a 60% drawdown. 60%.
Hmm.
I haven't seen that looking at back tested data. So that was an extreme, but the year ended up over 100, close to 120% on the system, even though there was a 60% drawdown. So look, at the end of the day, it's a mechanical system, and it's a mechanical system that in 2020 made 200, close to 240% with a 30% drawdown. Anything before that or after that, I mean, you want to stay with a system that did that performance in a
Hmm.
space of time, because anything like that where the maximum drawdown is like maybe a little over 10% of your actual profit for the course of the year is insane. That's incredible. In my
Yeah,
book.
that's a yeah, no, that's crazy. I mean, for everybody watching this that's, of the trading world and, is managing a fund, I'm sure you feel the same way. And yeah,
So,
I
so
guess
to
we want to
answer
know.
your question, because I really didn't answer your question, what makes my system different? So, my system is not for people that are very conservative in trading. I would say it's not for really. I would say it's either you're a high roller or somewhere in the middle. You're a type of person that is willing to take a risk for high reward, and but it's not for the conservative. I mean, you're talking about a year where you could have lost in a drawdown of 60%. Of course, it recouped and I don't know, closed up over 100%. But you have to be able to stomach that kind of deficit in your account. It's going to happen. I mean, this year 33%. If you can't stomach a 33% drawdown, then turn the page.
Yeah, no, that's true. I mean, I guess it also, obviously, anybody that's watching this, you're probably in the trading world, or interested in making money investing, or anything like that. So I guess how has your how can you maybe you could share a story of how, like, this type of being involved in this type of world has affected your life, before and after, kind of thing. Like, maybe you were just focused, like, I know you went to McGill, you found, you discovered the equation, and then you created it, you sold the book, and then from there, like, how has your life, you know transformed into where it is right now, like, kind of like before that and then after? And then, like,
Um,
how has this system impacted your life as well, or just in general, like, yeah, how has it made an impact on you or anybody else that has been involved?
well, it certainly changed my life. I mean, and for the good. I I I I, I like making money. What can I tell you? It's a good thing. I mean, everybody needs money, and to have a system that's producing these kind of results, um, you know, I'm proud of myself because you know I was just a student. I was like 20, 21 years old in a library, reading books on the stock market because I was so intrigued. And then I fall upon this beta equation, and I start, hacking away uh, and playing with numbers. And then I wrote a book, and I'm proud about that. And and there's a huge following. I mean, Camarilla Equation. My Camarilla Equation. There's searches. I mean, you did the searches, Jordan. I mean, there's I think 1 million or 2 million searches on Camarilla pivots. Amazon, there's like 6, 7 books right?
Yeah.
On Amazon about the Camarilla Equation. I've never read them. I, they could be interesting, but I have not read them. And I mean, there's one I believe called the Holy Grail of of the markets, or could it be the Holy Grail, or the mystery of the Camarilla Equation? Of course, it's a mystery because I haven't really uh, in the last 20 years I haven't really uh, been public about my my information about my system and so on and so forth. It's only since 2018 when I started to where I decided, or pre 2018, I decided to actually put all my knowledge into an automated system. Did I decide, okay, Mitch, um, let's take it a step further. Let's build a website. Let's try and sell the system. And
Mhm.
I do sell the system, um, not in large quantities. I sell it on my site, and yeah. So that's we're at the apex of all these years, and we're talking, Jordan. We're talking starting in 1988, where I started doing research. So I don't know if you do the math, it could be something like 35, 36 years. And we're talking today, and it's only in the last couple of years that I've really started to take it to the next level, and now I have it perfectly set, and my system, the software is available to be sold and has sold, and so it's very, very exciting times for me.
Yeah, no, thanks for sharing that. I mean, I guess what I want to know, like, for somebody that is maybe a skeptic out there, like, some people might say, well, if it's working so well, why do you have to sell it? Like, what was your decision to,
Well,
like, what's your why behind now sharing
do you want me
this?
to tell the audience what I sell it for?
Well, yeah, I mean, if you want, or yeah, sure, why not?
I sell the system for $10 million, and I've only decided to sell 25 units.
Hmm.
So not too many
So,
people are going to get this anyhow. Um,
mhm.
why not? I've worked so many years to get to this level, and why not give a certain amount of people the opportunity? I mean, it's a large investment, but the return rate, based on past performance,
Mhm.
and the drawdown rate, you know, comparatively speaking or relatively speaking to the return on investment, that
Mhm.
ratio is incredible. We're talking about an average of 100% return on average, maximum in the last 5 years on your money, with a maximum drawdown of 40%. I mean, in any business, where if you're going to invest money and your potential is to double your money, or you may just lose 40%. In any business, that's huge. So I'm not like trying to sell it to to a large crowd of people. I have 25 units that I started selling it in that limitation of 25 units, and that's what I'm doing, and I'm selling it for $10 million. So not every person will be able to purchase my software, but some will. And in addition to that, and this is also on the website, and we talked about that. When someone purchases my system for 1 year, I am willing to manage their system or manage the software on their behalf for their account, which can be done in several ways. I can access their account remotely on a daily basis and make sure that all the charts are running smoothly. The other way is I can run through through a portal, I can actually run the system directly to their account and have their chart for their account right on my computer. So I'm doing, and I'm offering that for free for 1 year, which which basically is a good thing because I support the customer. I'm there to to make sure everything is good, and for 1 year, and and that, and at the same time, the person on their end uh, is seeing how the system functions. So after a year, they could just run it on their own, or less than a year, they could run it on their own, right, on their own desktop, and have a smooth transition from the beginning of where I supported them to being independent with my system.
Mm.
So yeah, I mean, look, at the end of the day, I could just privately run my system and trade myself and so on and so forth. But I said to myself, why not? Let me offer this to the public in a certain quantity, certain amount. Also, I wouldn't want too many people to have the system because I'm recommending to trade at a certain price level in the market, Jordan, where
Mm-hmm.
if you have 100,000 people that are going to trade at one price level, right? That's not good.
Yeah.
You want to limit the amount of traders trading at one price level. I mean, even though S&P 500, the average volume is 1.5 to 2.5 million transactions every day, which is huge. But
Yeah.
nonetheless, keeping it uh, uh, you know uh, only available to a certain amount of people, that's the way I want to do it, and that's the way I'm going to do it. I'm not going to change that.
Mm-hmm. Yeah, yeah. No, that I've obviously, because there's a lot of people out there that the way they make money is they sell a course on how to make money, right? There's a lot of those fake gurus out there, and people teaching about how to trade and follow my trades, or just copy what I do, and that's really how they make their money, right?
But the thing is, a guru that does that, um, maybe every single day they have, they evaluate the situation and they offer uh, different trades and so on and so forth. But with me, with my system, it's all mathematical. It's
Hmm.
there's no subjectivity. It's pure math.
Right.
It's
Hmm.
so. What am I going to say? I don't know what to tell you. Like, I don't know what's going to happen tomorrow, but I'll tell you what's going to happen tomorrow. Tomorrow, the new levels are going to kick in for the pivot points, and we'll see where the market opens. I didn't know where the market was going to open last night at 9:30 when the market opened this morning. The market was down, and I didn't know that the market would be down. How could I know this? It's How could you predict? But what you can do is calculate, should the market reach a certain level and come to you and come to your price, are you going to take a position? And that's what the system does, is if the market should reach a certain level, it will take a position and sometimes double down like it did today. And with success, it doubled down, and boom, we made 5% on our money. The last two sessions have been great, 5%, and the other session we made 3%, Jordan. So 8% in 2 days. So the last couple of days have been good, but not every day is like the last 2 days. I mean, some days you can make 8%, and then over the next 2-3 days you can lose 10%. So that's
Yeah.
the nature of the game. But like I said, like we talked about, it's always a long term focus on Fortress Rubicon.
That's awesome. Well, hey, look, thank you for sharing that, and we're gonna wrap up shortly. But one last question I always ask is, to anybody that discovers something or discovers their purpose or catches on to something, a glimpse of something like how you did, like, what kind of advice would you give these people, on terms of, either pursuing it or going after something, even though maybe on the outside people might think they're crazy, or people might think that, no, don't do that, don't believe in that, don't, you're delusional, or yeah, just what would you give that person who catches a glimpse of something that could be great, and for them to go after it? Like, what kind of advice do you want to give those people? Can you give those people?
I'm going to tell you, and I have a good answer for you. So I discovered the equation in 1990 in August, but I only wrote the book and published the Day Trader Handbook 7 years later. Okay. Why 7 years? Even though I had the pivots structured, the equation structured, okay, I had to find a certain structure or a structured strategy based on the levels to get it perfect, so that it's one thing to have pivot points. It's another thing to decide when that pivot point is touched. Are you going long? Are you going short? Okay. And Fortress Rubicon, okay, sometimes you're going against the market, sometimes you're going with the market. So not every situation is the same. So my point is that I never gave up. Even when I had the equation, there was still a lot of work to do to really, really get it down to a complete science, a science where whether I win, whether I lose, I'm so happy with the system, because I know, based on past performance again, okay, based on past performance, I know that the system is going to make money. So to answer your question, and it could be anything in life, and at the end of the day, and I have to say also, and I love that you brought up the fact, or you asked me questions about my past, because my past was very difficult. It wasn't easy. It just wasn't easy. But it made it tough. Because it was so tough, it made me tough. And because it made me tough, and I had to be tough, I basically kept with what I wanted to do, and I didn't let go, and I kept at it, and I kept at it until I reached the point where I was completely happy. So let me tell you one more thing. I released Fortress Rubicon in 2018, but a few years before, okay, I also discovered something that is part of Fortress Rubicon that I've never seen before, that is relative to my equation. And it took me a while to get to it, but I found something, and I was researching it for quite a while. And I perfected that nuance of a strategy, which is incorporated into Fortress Rubicon. And that took hard work. So look, at the end of the day, if you love something, if you love to, I'm talking career-wise. I mean, I love a lot of things, but I'm talking about a passion of something that you want to do. Some people, they may not be happy with the work that what they're doing currently for work-wise, but if they have a passion that they always loved, or want to pursue, then just keep going at it. Because look, I'm a big Michael Jordan fan, and if you read about, or if you learn about Michael Jordan, those first few years he was on the bench.
Oh yeah, I didn't
A
know that.
lot of the times he was on the bench. He was not producing the way we know about Michael Jordan. But Michael Jordan, man, he just did it. He kept at it. And I mean, for me, I mean, he's one of the greatest of all time, of all athletes. I mean, it's amazing that one year he left the league. I think he played baseball for Chicago. And then he came back, and they won the cup, for the NBA title. So so basically, my point is that he had hard times in the beginning, but he never let go. And so, if I could end it in this way, never let go, keep at it, and and the last thing I will say is, whoever wants to get more information is welcome to use the contact link on the website and email me directly. I receive that immediate email from the contact link, and I will respond to them ASAP. And I really appreciate, Jordan, for having me talking with you today. And I thank you.
Hey, thank you so much, Mitch. We always appreciate, I mean, I always appreciate you, man. And time we talk, you always have that energy and that intensity about you. I know you seem calm here, but if you talk to Mitch off the cuff, he does, sometimes he gets intense, which is good because you have that passion for what you do, right? So,
Thank you.
and anything that you're doing. So, and especially what you're talking about right now, you could feel that passion, because it's been like almost 30 years, right? So, or no, more than that, more than 30 years, right? So,
Yeah.
so yeah, guys, definitely, if you guys are interested to know more about Mitch's system and working with him, definitely we're gonna provide a link below on his website, and definitely reach out to him. So. Thank you guys so much. Sorry, yeah, and thank you, Mitch, really, for being here. It's a pleasure. It's an honor, and
Thank you.
I'm really glad that you guys can be here to watch this and enjoy this
You've been a
conversation here.
great
So,
host, Jordan. Thank you so much. I appreciate having me here on this podcast. Thank you.
hey, you're welcome anytime.